let's say Munich is always the best example. When you look at the people who buy sort of the downtown areas, the most expensive areas, even the yields for 2-3%, it's the big private family offices or private individuals, and that's all they care about. You know, they don't need to per se make additional money. They just want to preserve their wealth, and that is. I think, you know, Munich is the prime example, but you see that in Hamburg and some of more of the traditional cities across Germany. And that's a competing factor because you cannot compete. You know, if you're a publicly traded company or most likely, you know, even if not public traded, but you look at the yields, it's tough to compete with those prices. And they are a factor in the market. They have become in the last 5 years, and they continue to be around. That's definitely a trend that we have seen, and I think is part of the market.
But I think I also have to add, that's nothing new for the German market. It's never had, it just seems a lot more attractive due to the deteriorating surroundings of the other European markets. It's what everybody wants. You know, boring is the new sexy. That's what the investors want to a certain extent. Our unit holders want wealth preservation. As long as the return is above inflation and it's on a year-on-year basis, they're happy to commit their capital and give it into our hands. And that's our focus. It's a defensive strategy. And that's the way you have to look at the German market. I was speaking to a couple of players yesterday, and one of them said, you know, I hate Germany. I've never made any money there. Not to the extent that he's made money in France, in the UK, or in London in particular. It's not as cyclical. It's not as ups and downs. Hence why it's quite boring. It's always been that way. Which is fine. We can live with boring, because we're not really. You know, underneath all that boring, there's some real drive and energy. Just look at Miss Merkel. Talk about boring. But it just looks that much more attractive today. But it hasn't been any different.
You have to add, however, I mean, it's pretty harsh comment saying you've never made money in German real estate. Yeah, but I know, I'm just for the point of just being, you know, if you've invested in German residential publicly traded stock in the last 18 months, you've made a lot of money, you know. With very little volatility, pretty low risk. So you know, there are opportunities, but it's the cycle. And indeed, you know, we've only seen it. We saw pockets of it for between 2003 until it crashed in 7 or 8, however you want to define it. And then in the last 2 years again, those have been pretty attractive real estate times for a German perspective. When you go beyond that, you know, there's been no growth in residential real estate across Germany. If you take certain streets away from Munich and Hamburg and Berlin, across the board, there's been no growth. So it's the last couple of years have been attractive, and I think, you know, I'm an office guy, but from a residential point of view, I still see that as a very attractive market. I don't see it being a bubble. You have to be very, very specific where you want to invest. But you know, all the arguments that we've heard will continue to be an issue from a positive point of view. You know, there's a lot of government speak about rent controls. I think it could be an election issue for the leftish parties in you know, the fall election. The Bundesbank has gotten involved in that discussion. You know, telling everyone, you know, hands off. It's not going to work. I personally, it's not going to work. I don't think it's going to happen. You know, the government everywhere, even the local state governments, are increasing the transfer taxes, the Grunderwerbsteuer. You know, they want to pick out and benefit from all the activity. And that's all these little issues are going to have a damper here and there. But I think the general trend is still extremely positive from a residential point of view. When you look at the key cities and you look at demographics there, because people are moving back into the cities, they need space. They're more single households. They want to have larger apartments, better outfitted, and that trend is not going to change in the next 5 years.
It's about time REITs can invest into resi, huh?
They can invest in new build.
Yeah, sure. But find that product. There you go.
Okay.